What is going on, guys? In this stock analysis and due diligence video, we are going to be going over the ticker symbol TTCF. Now, usually I love talking about penny stocks, and a lot of my videos in my stock trading playlist are about penny stocks, but today we are going to be going over a ticker symbol TTCF, which is in my long-term portfolio and which is one stock that I believe has great potential for future growth. Now, before we do that though, my name is The Cash Creator, and if you haven't already, I want you to consider subscribing to my YouTube channel and following me on Twitter for more great stock calls right now. So let's get right into the video. First and foremost, the due diligence part. What exactly is TTCF and what they do? So they are a leading plant and plant-based food company in the USA. They make pre-prepared frozen meals that have ingredients directly sourced from farms in Italy, and then they are produced here. They have a factory in Italy and a factory in Los Angeles too. So they have an impressively increasing portfolio of products that is, growing very, very quickly. And there are currently over 20 meals in USA supermarkets as of now. So another thing is the fact that TTCF was previously a SPAC. And as you can see in this slide over here, they went public in October 2020 through this company here, FMCI, Forum Merger 2 Corporation. Okay, so that is their background, and currently they have a share price of $24.74, and we're going to be talking about that later on in the stock analysis section. So let's talk about the potential opportunity for TTCF right now. So there is currently a huge market for frozen retail sales, which is $55 billion. Currently, Tattooed Chef, their current opportunity is $33.9 billion. As you can see here, meats and alternative meats, such as plant-based burgers, for example, prepared foods, pizzas, vegetables, and fruits. This is their current market, but they can also expand that into here. The frozen desserts section is a $12.6 billion market, and Tattooed Chef hasn't explored that yet, so their potential opportunity could be a lot bigger in the near future. Okay, as you can see over here, millennials and Generation Z, they're driving growth in the frozen food section due to convenience. People just want something quick and easy, and also veganism, vegetarian people, for example, gluten-free. A lot of that is growing. There's a lot more vegans out there every single year. It's the growth is huge for the vegan market. People are looking towards it, not just for a lifestyle choice, but also because of their own reasons, such as religious reasons or whatever, or just natural health. So it is an opportunity that is big right now, but it's going to continue to grow, I believe, the vegan market. I personally am a meat eater, but I do understand why other people do it. Why they like vegan products, etc. So the next thing that we'll talk about is the CAGR, compound annual growth rate, is 68%, which is pretty big. That's very, very elevated. Financial resources for TTCF right now, they have an over $90 million cash balance, and their debt equity ratio is, if I check here, it's very, very low. It's at 0.01, which is pretty damn impressive, if you don't mind me saying. Okay, guys, so the next slide again, so this is the year-over-year product introduction. Over here, 2017 and 18, they had this amount of products, less than 10. Then it, year on year, it just grows and grows. 2019, they had more. 2020, there are 38 products that they are producing, and then in 2021, they are looking to by the end of 2021 have 62 different products, which is impressive. It's almost 100% gain from 2020. So they are always looking to improve their products, to add more products, to increase revenues, etc. It's just awesome what the Tattooed Chef is doing, in my opinion. And then opportunity for future growth. So this is where we are right now. Tattooed Chef, in aisle white space by 2022. What they're looking to do is have a lot more products, up to 200. So this year, by the end of this year, they want 62, but by 2022, the end of 2022, they want over 200 plus products. So that is again very exciting to see. They want to advertise on new platforms, sell on different platforms. And again, by 2023, what they're looking to do is, have their products in food service places like restaurants, for example. They, in convenience stores, because they're not having them in convenience stores right now, and international. So they want to expand their product to UK, for example, to Asia, especially India, for example. You have to remember, in India, which has a huge population, over a billion people. In India, there's a huge amount of vegetarians. I think it's due to religious reasons. Correct me if I'm wrong, but vegetarianism and veganism is quite big there. So again, that's a huge untapped market, and in a lot of other countries as well. I think generally, in and around Asia, people do love to eat vegetarian products. So again, the potential for this is huge. The potential opportunity for growth. Okay. So the next slide we're going to talk about is where they are right now. So the distribution agreements they have right now. Okay, as you can see here, there's Walmart here. They have Costco distribution agreements with Costco too. So currently they have some big names that they are currently have agreements with, but they want to expand that. So if we want to go on to the next slide, so these slides are from the end of 2020. So in the last 60 days, so this was November and December of 2020, they introduced Tattooed Chef to the following national retailers. And then again, these are big: 7-Eleven, you know how many there are if you've been to the US, Whole Foods, Target. So obviously these are all huge names. So if for example Tattooed Chef gets agreements with these companies, then again they'd have more products in more places, more potential revenue, and again that will just compound and continue to grow, and the company would be all amazing for the company. So again, the next thing that I have to mention is the fact that Tattooed Chef, they have all their growth so far has been organic. They have not had any advertising campaigns. It's all been very organic growth. But in 2021, they are, they're going to have a big advertising campaign. So with Nitro Marketing, and they're trying to build a 360 brand ecosystem of content, social, and advertising. So they're able to connect with consumers, on all platforms. Okay, so again, I do think in this day and age, in 2021, in the 21st century, a lot of companies, they rely on advertising for huge amounts of growth. So if you remember the CAGR, the compound annual growth rate, was 68% already with organic growth. So imagine how much Tattooed Chef will grow with a driven advertising campaign that will really focus on introducing the products and the organization to people. Okay, so again, the potential is huge. So the next slide is basically the financial projections. So right now, in 2020, we haven't got the Q4 results, but the predicted revenue is going to be 135 million. Okay, and if we go back onto this slide, 2021, their projected revenue is going to be 222 million. And then all the way in 2026, as you can see, their projected revenue is $1 billion. So again, obviously, we can't always rely on a financial projection, but the potential is simply massive. And their current market cap for Tattooed Chef is again $1.75 billion. So imagine they had, again, this is a long-term stock, so a revenue of $1 billion in 2026 would make the market cap a lot bigger, obviously, because more people will buy the shares, and the market cap will go up. Okay, so I do think it's a good value right now for a long-term potential hold, a good long-term hold. Okay, guys. And the next thing is the leadership team. In my due diligence section, as you can see, it's a family-owned business. This is the Tattooed Chef. She created this, the creator of the Tattooed Chef, and she decided to shift the focus of the company to more plant-based things. She was a former chef in Italy, and she helps to make different products and try out different products, okay, and bring new products to the market. Sam Geletti, he's the CEO and president. He has 35 years of experience in the food industry. So again, he's someone who has a lot of pedigree and, you know, a lot of tactical nous. So again, these are all other people. They all have great amounts of experience. So, you know, it's a team that you can trust, and a team with a lot of experience in the specific food industry. Okay, guys, so this is again very important when you're looking at a stock, having a good team of executives that will help to grow the organization. So next thing, let's talk about the stock analysis. I'm going to go on to Finwiz, and as you can see, here is the stock chart. The current price is at $24.74. That was the last closing on Friday, and here is the share price. So we're going to talk a little bit more about what's happened. So they had great over in November. They had great Q3 revenues, which caused the share price to go up. But then they were targeted by a short selling firm, which I'm going to find over here. The article here, Kerrisdale Capital. They were targeted by them, who released a damning report. But this happens to a lot of companies, such as IDEX, for example, where short sellers just want to drive the price down so they can make money. Okay, so that caused the share price to fall after that. Okay, and then it was all the way down here in December, the low of $14, and then since that it's been a steady growth all the way up to here. Around end of December, it reached pretty good highs, and then since December to the current price right now, it's been hovering. It hasn't dipped below 20. It's been hovering around the 22 to highs of $27, $28. So I do think it won't reach $20 again, and we are getting very close to the Q4 earnings of 2020. So again, good earnings could cause the share price to go up. So the reason the share price went up pretty big in December after the short selling report, it bled all the way down here till around $14, but then it started to go up. The reason for that is because of an exciting product launch, and then the presentation at the analyst day event, and I've included some of these slides previously, as you can see. And then since December, there's been no PRs, so it's been 2 months. There's not been any big PRs, so for that reason, the price has fluctuated from, you know, around here late December. It's fluctuated, been up and down since, you know, the $20 to $28 range. The reason for that is because there's been no PRs, and again, it is still being targeted by short sellers. So you can see the short float here is 19.36%, which is pretty high. So again, it's still being targeted by short sellers, but a good Q4 earnings which is going to be released, you know, towards the end of this month or in February-March time. So good Q4 earnings could, you know, be huge for this company, because again, as you can see over here, when the Q3 earnings were released, there was some good growth, good price action. So again, similar could happen if there are good earnings in Q4. Okay, guys, so that's the analysis of the stock. What I would say is, personally, I have a pretty good average because I invested quite early in late December. But if I was looking to invest now, what I would do is I'd put a limit order in. So even last week, so this was February the 1st, which was 6 days ago, the price dropped all the way to a low of 21.85. So there is a chance it could go below 22. If I was you, I'd put a limit order in, potentially around the $22 mark or just below it. I personally don't see it going that low again, because it's the run up to the Q4 earnings. So I think more people are gonna start investing in anticipation of good earnings, and then the share price is going to continue to go up, and then depending on the earnings, it could go up more, or if the earnings aren't good, the share price could go down. So I don't know, I can't predict that. But what I would do is put a limit order in if you are interested in this stock at a price that you're willing to pay. Okay, and again, I'm not a financial advisor, so do your own due diligence and do your own stock analysis. Okay, guys. So let's talk about future growth for this organization. So related to future growth, what I will say is Again, they don't currently have international retail, so they are not selling products abroad. So that is a big avenue for future growth that could cause the share price to go up more. There will be more revenue simply. So again, more people will be interested in the organization. The other thing is more marketing. They don't have they never had a marketing budget previously, and the share price has gone up all the way to $24.74. So now in 2021, like I said, they're doing a marketing campaign. So more marketing will cause more growth. The products will be seen in more stores. People will be interested in the product more, buying it, even buying it online from their website. So again, more marketing will cause more growth. And then the next thing, let's compare to Beyond Meat. So we'll look at Beyond Meat's share price. So Beyond Meat went from around $90 all the way over here. The share price is at $90. Over here, back down here, it's around $90 in May, and then all the way here in October, June, July, August, September, October, in a matter of 6 months, the share price went up all the way to 190. So that shows the potential of plant-based products such as Beyond Meat, such as Tattooed Chef. So there is great potential in this industry. Again, Tattooed Chef in 2020, their revenue is predicted to be 135.7 million, as you can see over here. Whereas compared to Beyond Meat, their predicted revenue this year is 400 million. So that is 135 to compared to 400. That's less than 4 times as much. However, Beyond Meat has 5 times the market cap. So that could show potentially that it's undervalued compared to Beyond Meat. Another thing is Tattooed Chef, their price to book ratio is 0.92, which is very, very good. It's an awesome ratio compared to Beyond Meat, which has 27.83. So again, the 2020 revenue growth for Tattooed Chef is 65% compared to 39% for Beyond Meat. So despite the pandemic, they have had year-on-year good revenue growth, both companies. But again, Tattooed Chefs is better, so they are growing faster. But again, they are smaller, so you could argue that this is due to them being a smaller company. But that is the end of my due diligence and stock analysis. Again, I do think it is a good organization for you to invest in long term. Do your own due diligence, do your own stock analysis, and let me know in the comment section below, what is your price target for Tattooed Chef? Are you interested in this company? Have you invested already? What is your average? Let's have a community down there in the comment section. Let's get going, guys. So thank you for watching. This is the Cash Creator signing off. Peace out.